May I know how we have solved this numerical? Do you remember? Can you share me the steps? Because this kind of cases are expected in examination. Can you share me the steps which we have followed yesterday? Yes, anyone? Any one of you? Hello? Hello?
Yes.
What are the steps we followed yesterday? Not replying. What happened? Hello? Hello? You're not replying me. Am I audible? Okay, now today we will go for the second case on transfer pricing. Before we go to the second, do you want me to ask anything about this? Anything you would like to ask? Yes, please. Anything you would like to ask? Okay, I am taking you to the next slide. Just reply me whether the next slide is visible or not. Is it visible? Is it visible? Hello?
Yes, sir.
Okay, now read this slide and then after 2 or 3 minutes, then we will discuss. Yes, did you read this slide? Reading is done. Hello? Hello? Have you read this slide?
Yes, sir. Yes, sir.
And now, everyone, please take a piece of paper with you, because after discussion, first I will give you the theory input. And once we discuss theory, then I will share a case. After a discussion on that case, then we will learn the solution of that case. Is it fine? Is it okay with you?
Yes, sir.
So take a piece of paper and let me share with you the theory in regards to the two-step pricing. This is the case study based on two-step pricing. So two steps are taken in case of transfer pricing. It includes two charges. And what are the two charges? The first charge, it is standard variable cost of production. And what covers standard variable cost? Anyone? The first charge is standard variable cost of production. So what comes under this standard variable cost? Hello? What it covers? Standard variable cost, what it covers? If you know, answer me. If you don't know, that also you answer me that you don't know.
So don't know, sir.
Okay. Now the standard variable cost, which covers material cost and labor cost. Material cost and labor cost, which is being covered under standard variable cost. And this variable cost varies according to the level of production. Okay, so this is the standard variable cost. And the second cost, as this is two-step pricing. The first price, the first charge is standard variable cost. The second one is fixed cost. In some book, it is also mentioned that periodic charges. So periodic charges is nothing but the fixed cost. And this periodic, usually monthly, that is equal to fixed cost. This periodic cost is given. It is to be calculated on a monthly basis. Second cost, fixed cost to be calculated on a monthly basis. Got it? There are two charges. The first charge is standard variable cost, and the second one is fixed cost. These are the two prices. In addition to these two prices, in addition to these two costs, we have to add profit margin into that particular product. First, you have to calculate. Actually, in cases already the information is given about variable cost. That you have to pick up variable cost. To that, add fixed cost. After adding fixed cost to variable cost, then add profit margin. And then this way we can calculate the transfer pricing. So this was the theory input about two-step pricing. Up to this, any doubt? It includes two charges. The first is standard variable charge and the second one is fixed charge. And then we add a profit margin, whatever percentage, 10%, 15%, that profit we add. So up to this, any doubt, any confusion?
No, sir.
No, sir.
Okay, then shall I take you to the numerical case? Shall I take you to the numerical?
Yes, sir.
You are
Yes,
ready
sir.
with you are ready with the paper, pen and paper? Are you ready with piece of paper and pen?
Yes, sir.
Okay, now I am sharing the case. This case is based on two-step pricing, and we are assuming some situation. So this is the situation we assume because it is given in the case. Can you see my PPT?
Yes, sir.
Now this two-step pricing assumed situation, there are two columns, business unit, which is a manufacturing company, okay? And the second column, this is the product which is produced by this manufacturing company. The unit name is X. Under one company, there are two units. Units का नाम क्या है? What is the division name? X. Answer me. What is the division name? What is the unit name?
X.
X. And the product name is what? Product name A. Product name is A. Because first we have to understand the case, what is being asked, and then you can calculate the transfer pricing. Now here we have to calculate transfer pricing. Now what information we have given? Expected monthly sales to business unit Y. Now this unit X is selling to unit Y. So this company is having two units. Which are those two units? Unit X and unit Y. Unit X produces product A, and that product A is being sold to unit Y. And they expect monthly sale 5,000 units. In the first line it is mentioned. How many units they are selling to unit Y? How many units they are selling to unit
5,000
Y?
units.
5,000 units, correct. Because you have to share me your response. Then I will understand that you are getting. Otherwise, if same kind of cases, if it is asked in examination, then you should not have a problem. You should be able to solve. So for that purpose, I am waiting response from you. Now the next line. What is the information given on the next line? Tell me. What is the information given?
Variable cost.
Variable cost. And this variable cost, what it covers? Variable cost. What it covers? Just now I told you. Can you repeat? What it covers? Variable.
So material cost and labor cost.
Correct. Material and labor cost. So this company has incurred material and labor cost, that is variable cost, ₹5 per unit. For every unit, company has spent ₹5. So this is the meaning of second line. Now third line. This unit X has incurred monthly fixed cost ₹20,000. ₹20,000. And this ₹20,000 for how many units? This ₹20,000 for how many units?
So 5,000 units.
Yes, correct. 5,000 units. So if I ask you to calculate per unit fixed cost, can you able to calculate? How will you calculate? Can you answer me? मी जर का तुम्हाला विचारलं, what is
So
the fixed
20,000
cost
divided by
per?
5,000.
Correct. 20,000 divided by 5,000, so that we will get fixed cost per unit. So that you understood. Now next line. Read and tell me what is the next line.
Investment in working capital and facilities.
How much rupees?
12 lakh.
12 lakh. So this company, unit X, has invested working capital and facilities, and this total capital, we can say this total investment is 12 lakhs of rupees. And then last line, competitive return on investment per year 10%. This unit X is expecting 10% return on this investment. Getting this point? Unit X is expecting 10% return on investment. How much is the investment?
So 12 lakh.
12 lakh. So on 12 lakh, Unit X is expecting 10% return. So this was the discussion about this case. Now we will go for the solution, that is calculate transfer price. At what price Unit X should transfer to Unit Y, that we will have to calculate. Up to this, any doubt, any confusion, what we are doing, what I am sharing with you? Any doubt so far?
No, sir.
No, sir.
Okay. Okay. Now, have you written this on the piece of paper? If not, I'm giving you 1 minute. Please write down on a piece of paper. There are only 5 lines are there. Write quickly. Write down, please. Once your writing is over, just give me signal so that I will start with the solution. But first complete this writing. Writing work is over. झाला का लिहून? Done. Writing झालं? Am I audible? Yes, please. Am I audible?
Yes, sir.
झालं का लिहून?
Yes, sir.
Okay. Now, shall we go for solution? Shall we go for solution?
Yes, sir.
Hello. Now here, this the given data, what we are calculating, what we are supposed to calculate? Anyone, please? What we are doing? How many units are there? How many units are there?
So 5,000 units.
5,000 units. And how many divisions are there? Division? X and Y. These are the division, correct? Now, X has incurred these expenses. X has incurred this, and at what rate X should transfer to Y? That we have to calculate. Are you getting me? At what price X should transfer to Y? समजता है क्या?
Yes, sir.
Now, look at this slide. Now, whenever I am sharing with you slide, please first you listen, understand. Then after understanding, I will give you time 2 or 3 minutes for writing. Then you start writing. When I share a slide, that time you should not write. That time you have to just understand first. First understand and then writing. Am I correct?
Yes, sir.
Okay, now look at this slide, solution slide. Now, one way to transfer product A to business unit Y is at price per unit calculated as follows. Now, we have calculated at what rate product A should transfer to unit Y from unit X. Now, variable cost. Now, this variable cost we have picked up from this case. I'm sharing you the case. Look at this case. Now, what is the variable cost? How much is the variable cost? Look at here. How much is the variable cost? 5, no?
5 per unit.
5 per unit. So here we are written variable cost 5 per unit. Understood?
Yes, sir.
समझ लगा? And then next, we have to again calculate fixed cost because this is two-step pricing. I told you there are two costs we have to identify. One is variable cost and the other one is fixed cost. बरोबर ना? That we have discussed. Now let us calculate fixed cost. Now look at this third line in the numerical. Monthly fixed cost assigned to product 20,000. So this is monthly cost for 20,000 unit. As you told me, 20,000 divided by 5,000 unit. So that we will get fixed cost per unit. You can write somewhere 20,000 divided by 5,000 so that we will get fixed cost per unit. Do this calculation, everyone. 20,000 divided by 5,000 unit. $20,000 divided by 5,000. How much it is? What is the value? Yes, Shubhada. Shubhada. Am I audible? Shubhada. Shubhada. Omkar. Shubhada. Then what is the per unit fixed cost? How much is the per unit fixed cost? 20,000 divided by 5,000. How much it is? Shubhada, calculate. 20,000 divided by 5,000. What is the value, Shubhada?
0.4.
0.4. Omkar, am I audible, Omkar?
Yes, sir.
Omkar?
4 per unit.
Yes, calculate Omkar. 4 per unit. Shubhada, it is not 0.4, it is 4. Hello, Shubhada? Shubhada?
Yes, sir.
It should be 4 rupees. तर आली का तुझ्याकडे व्हॅल्यू आली का 4 rupees?
Yes, yes.
Okay, now look at here. Fixed cost per unit 4. How this 4 has come? I told you there is 20,000 total cost divided by 5,000 unit, 4 rupees. Here we are written 4. Writing तुम्ही नंतर करा. आता फक्त समजून घ्या केस. So variable cost plus fixed cost 5 plus 4, that is 9 rupees. बरोबर ना? 5 plus 4, 9. बरोबर ना? Now, in this two-step pricing, after identifying variable cost and fixed cost, now add profit per unit. Now, in the numerical, now this is a numerical slide. What return? Return means काय profit. Return means what? Return means what? Profit. बोला मला शेअर करा तुमचा. Profit means what?
Return means profit. Yes, sir.
Yes, return means profit. So this company is expecting profit 10%. 10% on investment. Now, what is the how much investment this company has made? Look at here. How much is the investment?
Sir, 12 lakh.
12 lakh. Now we have to calculate 10% on 12 lakh. Calculate 10% on 12 lakh. %12 on 10. 10% on 12 lakhs of rupees. Correct calculate?
So 1,20,000.
1,20,000. So this 1,20,000, it is for a year. बरोबर ना? It is for किती? This 1 lakh. How much? Omkar? 10% on 12 lakh.
So 1,20,000.
So 1,20,000. This is for
1 year.
how much period? 1,20,000. 1 year. 1 year. Now, when I started the first slide, there, yeah, you might have not noted, but now note down. This we have to calculate on a monthly basis. Okay, two-step pricing should be on a monthly basis. So here, 10% on 12 lakhs rupees, 1,20,000. So if it is 1,20,000 for a year, so how much for a per month? How will you calculate for per month? In a year, how many months are there? In a year, how many months? There are how many months in a 1 year?
So 12 months.
12 months. So 1,20,000 divided by 12. Correct calculate?
So 10,000.
10,000. So this is the 10,000 for how many units? These are the units. How many units?
5,000 units.
5,000 units. So how much for per unit? So 10,000 divided by 5,000. Correct calculate? किती आलं? 10,000 divided by 5,000. किती आलं?
So 2.
Do this calculation. 10,000 divided by 2. So look at this solution. Here, profit per unit, it is 2. This is 2. Profit per unit. This is 2. This is 2 rupees. And this 2, how it has come? Profit per unit, that is 12 lakh divided by 12 into 10%. And then again divided by 5,000 unit. मी आता जे तुम्हाला explain केलं. Same I have written over here. Are you getting my point? Are you getting my point?
So could you please repeat once
Yes,
again?
See, total investment is 12 lakhs of rupees. On 12 lakh, 10%. You answered me 1,20,000. 1,20,000 divided by 12 months. We got for per month. It is 10,000. Then 10,000 divided by 5,000 unit. This way, rupees 2 per unit profit. समजलं का शुभदा? ओमकार?
Yes, sir.
So 5 plus 4, 9, 9 plus 2, 11. Transfer price is 11 rupees. Transfer price is 11 rupees. So this is our answer for case. So this kind of cases are being asked in examination for 5 to 10 marks, 5 marks. And this way you have to solve. Unit X will transfer its product to unit Y at the rate of rupees 11. Now, understand this line also. If transfer of product A in a certain month are at the expected amount of 5,000 unit, under the two-step method, unit Y will pay the variable cost rupees 25,000. That is 5,000 unit at the rate of rupees 5 per unit. Because here it is being mentioned variable cost. It is, how much is the variable cost? How much is variable cost?
So 5 per unit.
5 per unit, correct? 5 per unit. So that, let me erase this. Five per unit. So 5,000 multiplied by 5 per unit. That comes to 25,000 rupees. Barabar na? 5,000 multiplied by 5, it is 25,000. And fixed cost, it is 20,000. Barabar na? Fixed cost, look at here, monthly fixed cost 20,000. 25 plus 20. Iti ala? 25 plus 20, 45,000.
45,000.
45,000. And profit, we have calculated profit that 10% on 12 lakhs of rupees. That comes to 1,20,000. This is for year. So how much for per month? Per
So
month
10,000.
10,000. So 45 plus 10 किती होता? 45 plus 10
55.
55,000. आला बरोबर इथं total of rupees 55,000. आला ना 55,000. Hello?
Yes, sir.
So it is 55,000. This is the same amount it would pay unit X if the transfer price were at 11 rupees per unit. आता 11 रुपयाने जर आपण calculate केलं, how many units we are transferring to unit Y? How many units from unit X to unit Y? किती unit आपण transfer करतोय? Number of units?
11 per unit.
नाही, number of units.
Number of units.
किती unit आपण transfer करतोय?
5,000 units.
5,000. Rate काय आहे per unit? 11 rupees. हे 11 rupees. 5 plus 4 plus 2. 11 रुपये काढला ना आपण per unit. ना rate. Hello?
Yes, sir.
11 आहे ना? हा. So 11 multiplied by 5,000. किती आले? 11 multiplied by 5,000 unit. How much it has come?
55,000.
55,000. 55,000. So this way we have given the solution for this transfer price. If unit X want to transfer unit Y, it should be transferred at the rate of rupees 11. परत repeat करतो. What we did, we pick up variable cost 5 rupees. Then we calculated fixed cost 4 rupees. How we have calculated? Total fixed cost is 20,000. 20,000 divided by 5,000 unit, 4 rupees. And then profit per unit. तो कसा काढला आपण? Investment is 12 lakh. On this 12 lakh, 10% we have calculated. That is 1,20,000. This is for year. Then we calculated on a monthly basis. That is 10,000 rupees. 10,000. This is for monthly. And total units are 5,000. 10,000 divided by 5,000. This way we got 2 rupees profit per unit. So 5 plus 4 plus 2, 11 rupees. So this way we have solved. Any doubt so far? Any doubt how
So would you
11
please
rupees has come?
so would you please share some more examples with us for homework basis? It will help us to understand the concept
With
more
this?
clearly.
No, I'm asking about this numerical. Any doubt for this numerical? Atta,
No,
how
sir.
this 11 rupees has come? This is very important. How this 11 rupees has come? Any doubt?
No, sir.
Okay, now I'm giving you 2 to 3 minutes. Write down this numerical in a piece of paper, and then we will end the session. Okay? Hello? Hello?
Yes, sir.
So therefore, the numericals on in respect of transfer pricing with respect to two-way pricing or cost-based, market-based are expected in examination. So before we close today's session, let me revise once again. Two-way pricing method, two-step pricing method. First, we have to identify standard production cost, that is variable cost. We have to identify the first thing, that is variable cost. Then identify fixed cost, addition of fixed, and then add expected return or profit to this cost. And expected profit or return, it is generally on the basis of investment. Whatever investment is nothing but the total of current assets and fixed assets. Yesterday we saw that example where there was a bifurcation given, fixed asset, current assets and fixed asset. That total we have considered and we calculated profit. Now in this today's numerical, the ready-made figure was given 12 lakhs of rupees, and they mentioned that this 12 lakhs of rupees working capital and facility. So we consider this as an investment. On this, we calculate that percentage. That percentage, whatever amount comes, we add variable cost and this way it becomes the transfer price per unit to be transferred to a particular division. Let me tell you again, these are very simple numerical. Again, I repeat, first you have to identify variable cost and then identify fixed cost. Once we identify variable cost and fixed cost, to that add expected profit or return. And then whatever total comes, that is nothing but the transfer price in respect of two-step pricing. So have you written this solution? Solution? Because now we are very close to timing, in time. So, but see, there are 5 minutes are there. But let me ensure that whether you have written this on a piece of paper. Numerical?
Yes, sir.
So again, study properly at home. And if you have any doubt, I am available in the institute also. So you can come whenever you come to the institute, carry your solution and come with the specific query. I will be happy to solve your query. But you have to come with the query, so that I will also come to know that you are facing problem in this particular step. So remaining step, you know, but this particular step you are having problem. So it will be easy for me to make you clear. But if you are coming in an abstract manner, sir, I want to understand transfer pricing. So that should not be approached. Whatever we have learned, out of that learning, come with the specific query. So that specific query can be solved from my end. And then this way we can learn the subject performance management, enterprises performance management. So this was about transfer pricing cases. Maybe in our next session, we will start the next unit, unit number 3, that is capital expenditure proposal. That we will start. Now, so far we discussed responsibility center, then types of responsibility center, profit center, investment center, and then we learn the transfer pricing method, that is cost-based price, market-based price, negotiated price, then two-step pricing. And yesterday and today, because yesterday I had conducted one case, but you express your wish that, sir, we want one more case. So this case, one more case also we discuss, and the solution is given to you after discussion on this solution. So this was all from my side. Yesterday's numerical and today's numerical. Again, you go through this numerical, and if you have any specific query, come and discuss with me. So this was about the solution of transfer pricing cases. As I told, from next session, we will start unit number 3, and that is capital expenditure proposal. What is capital expenditure proposal? That we will start from the fresh lecture. So thank you all. Have a good day.